What's up, everybody? Today we're going to be talking about a topic that's actually very near and dear to my heart, and that is finance. For those of you that don't know, I've been a financial planner for 14 years, and I've been investing in stocks and all that for much longer than that. And I got a comment the other day on one of my videos about the internet from a young lady named Hannah, who just left a very heartfelt message about her current situation. See the comment here. And it resonated with me because me and my wife had the exact same upbringing. It is very hard trying to figure this stuff out without any real guidance. And for certain communities, just even if you did have the guidance, a lot of times the advice and stuff is just nonsense. So, with that said, I decided that I'm going to make an entire series on finances. We'll be talking about credit, how to build it, how to manage it, even like what type of credit cards you should get, how to do loans. We're going to be talking about stocks, cryptocurrencies. We're going to be talking about 401ks, passive income, all of that. Okay, but I'm going to have to do them in obviously multiple videos because it's a lot of content and I want to make sure everything is clear and concise. So with that said, let's get into today's video, which is how you should invest your stimulus check. So we're going to cover three things. We're going to first talk about how much to invest. We're going to talk about what stocks you should invest in, and we're going to talk about why income is better than growth. All right, and I'll explain what that is once we get there. So let's go ahead and start with number one on how much to invest. Now, only you can really answer that. If you need your stimulus check, I mean, obviously you need to pay your bills, but I would say if you need it, depending on how much you need, if you think you need it all, you probably don't. Just take a small percentage, 5%, and put it towards stock, okay? You want to start putting aside something, okay? Even if you feel like I don't have anything, you do. And we're going to make more videos talking about how to budget and how to budget in a fun way too, not just giving all your money away to other things. We're going to have something in a budget for giving to yourself as well. But even with this stimulus check, let's say you feel like you need all of it, then put 5% in stocks and put 5% aside for yourself. Because whatever amount you invest in stocks, you also need to invest in yourself. Life cannot be all work and no play because you can't keep up with that. All right, we're here to enjoy life. We intuitively know that. So you have to do something for yourself if you're doing something for others, okay? So and we apply that to finances as well. Now, if it's just straight extra money for you, then great. I would still say do the same thing. Invest in stocks and invest in yourself. But if you have other money to invest, you don't really feel like you need anything, then you can invest it all. It's all up to you. But again, we'll talk about the budget in another video. So only you can really decide how much to invest. So moving on to stocks, we're going to cover briefly a lot of things. And I'm going to, like I said, I'll talk about stocks and stuff in more detail in other videos, and I might be making a course because it is really a lot to digest, and I really would prefer to break everything up into like smaller modules, like 30-second videos if I needed to. All right, but what stock to invest in? I recommend that most people only invest in dividend stocks. So what's a dividend? Let's use an example to explain it. Let's say you have a friend that owns a company and they come to you and they say, hey, I need some more money to further my business. You ask, well, how much do you need? They say, well, you can invest as much or as little as you want. And whatever you invest, I give you 4% annual yield, which means every year that goes by, you'll get 4% on the money that you invested. That, in its basic form, is what a dividend is. That payment that your friend gives you each year is your dividend. Now, some companies pay dividends in different frequencies. So some may pay annually, which is once a year, and then some pay 4 times a year. They pay quarterly. Let's say in this example that your friend paid you quarterly. That means you will get 1% each quarter, which equals the annual yield of 4%. So if you invested $100, every quarter you'll get $1. That'll equal $4, which is 4%. If they paid you once a year and you only gave them $100, they will pay you $4 at the end of the year. So that is what a dividend is and how a dividend basically works. The reason I recommend that is because it's easy. You could just simply find good companies that are name brand, that are mid to large cap companies, and I'll explain what all that is as we get into it because I'll do it live for you. And you can find some that pay decent dividends. And then every time you get paid, you just following your budget, take a percentage of your paycheck, and you just put it in there and don't have to think about it. In fact, you can even have it directly going into there and you don't have to think about it at all. And that's why I recommend it, because it's easy. All right, it offers growth from the stock itself, and it also offers extra income. So let's go ahead and get into that right now. I'm going to show you guys live because I just transferred some money into my brokerage account and I need to buy some stock. So let's look here. I'm already logged into my account, and here is a list of high dividend stocks that I was going through. Now you can see I have some tabs open up here. BlackRock, this is what I'm actually going to buy today. And see, this is kind of goes towards why I don't recommend people, your average Joe, try to day trade. First of all, in order to day trade, you need at least $25,000 in your account. And most people don't have that. And there's a reason for that, because most people don't know what they're doing and they lose all their money. Like sitting up here listening to Elon Musk tweet about something, you go buy. That's insanity, okay? Yes, it has worked for some people, but it's totally accident. You need to be well versed in these things. And if you haven't lost a lot of money and made more than you've lost, you don't really have the experience. Most people have to do this stuff for at least 5 years to get okay. And in order to get good at day trading, you got to have somewhat of a gift. All right, so anyway, I'm going to buy some BlackRock. The reason I'm buying BlackRock is I've been familiar with BlackRock since 2007. So I know they're not like this new company that's just come on the scene. They're basically a company that invests in other companies. And usually you can go to their website, you can go look through their portfolio and see what companies they have. But I know that they're pretty decent at investments, and that's why I am investing in them. I'm familiar with them. Again, if you're new to this, you probably never heard of BlackRock in your life, and that is why you should not be out here trying to buy stocks on your own. I'll get into the stocks that I have. Buy stuff that you're familiar with, okay? And the more you get well-versed in this stuff, or you could just hire a professional such as myself. I ain't saying hire me, but hire a professional that knows what they're doing, and they can invest your money for you. But I'm going to buy some BlackRock today, but just to briefly show you why, we come down here and we look at annual dividend yield, and we see that they pay out 8.2% annually, and that's very, very good. Think about most people, they put money into CDs and they can't touch that money for a whole year. Meanwhile, they're giving it to a bank like Bank of America or whatever, who's really partially owned by BlackRock. And meanwhile, BlackRock and Bank of America are trading with your money, buying up other companies and stuff and getting dividends. This is very simple math. So let's say I was a company and I say, hey, I'll give you 1.5% in a CD if you give me $10,000. You give me $10,000, I'm just going to come over here and buy some BlackRock. I'm going to get 8.2%. And out of 8.2%, I'm going to give you back your $10,000 plus an extra 1.5%. And I'm going to keep the difference. How much money did that cost me? Nothing. Donut. All right. And that's what they're doing. That's what's going on when you buy CDs. Now, the cool thing about doing this stuff yourself, one, you can see you can make way more money. And this money is always accessible. If you need the money for whatever reason, you can sell your position and take your money out. All right, so anyway, that's why I'm buying BlackRock. I'm familiar with it. They pay good dividends. Now, unfortunately, we just missed the ex-dividend date, which is March 12th for this quarter, which means it takes basically a snapshot of your whole portfolio. So if you own 1,000 shares or whatever of BlackRock on March 12th, then they'll pay you out March 31st, what was it? 7.79 cents per share that you owned. All right. The other reason I'm buying BlackRock is because it's cheap. It's only $11. So anyway, let's look at some other ones. We look at Credit Suisse. Maybe you've heard of them, and they pay out 7.72%, and they're only $2.41. Now, generally, I don't mess with penny stocks, and penny stocks is anything under $5. But Credit Suisse, people have heard of them. This is one of their high yield bonds. You'll go over here, look at their volume. It's light volume, but that's the trading volume for the day. And we look at their market cap. That's important to me because it tells me how large the company is and how much money they have. Their market cap is $249.5 million. If we go back and look at BlackRock, it's $1.4 billion. I look at stuff like that because obviously the more money they have, the less likely they are to go under really quickly. And it's also, again, a good thing to only fool around with companies that you are familiar with. So look at this Mellon High Yield Fund. They pay 8.35%, and they're only $3. I mean, I could have done that, but again, the market cap is 223, and I probably will come back and buy some, but just not today. I'm gonna buy some BlackRock. And you can look at Bloomberg's short-term high yield bond, and their annual dividend yield is 5.13%. Not as good as the others, but you can even come over here and you can look at some ratings from other professional companies that give you their opinion. Like Morningstar, as of February 26th, gave this a risk assessment of below average, but the return was average. So obviously your reward here is going to be higher than your risk. And that wouldn't be a bad thing to invest in. Their total assets is $4 billion. And you can even come down here to see what they've done in the past. You can see what companies they hold, their top 10 holdings. You see Caesars Entertainment, it's like Caesars Palace in Vegas, T-Mobile, just trying to name some things people might be familiar with. Carnival Corporation, so Carnival. Now, me personally, I don't like that. I wouldn't hold any Carnival. Last year, I was heavy in Norwegian, but again, that comes from experience, and this video's already getting kind of long, so I'm not going to get into that. So anyway, so let's go to my account. I use TD Ameritrade, and I love them for one reason, deposits. So if we go here and we go to deposits and we look at my activity, we can see that I transferred today, March 24th, $3,000. And let's go look at my account and we can see that $3,000 is available. So we see I'm really up $125 a day, but this $3,000 of that, $31.25, was what I deposited today, and this money is available for me to buy stock right now. So I like that. So I'm going to buy $3,000 worth of BlackRock. So let's go look at that. We just go back here, and I can go to buy, and I'm gonna just do market because I don't really care. But again, we'll go through a whole nother video outlining how to actually buy the stuff, like what this stuff means. But basically the action is what you want to do. I want to buy. So we have buy, sell. You guys are probably familiar with that, but buy the cover and sell short. That's when you're shorting. So don't worry about that. Don't get involved in that stuff. That's for the advanced. The quantity, I'm gonna do 260 shares. The stock symbol HYT is BlackRock. The order type market. So market means when I place this order, it's going to fulfill it. Whatever's there, whatever the bid is, or whatever the ask is, that's just exactly what I'm buying it at. I'm not going to try to negotiate or anything. When we do limit, we say, oh, well, I see right now the price is $11.46. I see there's basically no spread. But the bid and the ask are the same. But sometimes it's different. Like the ask might be $11.56 and the bid might be $11.49. And you can go in there and say, well, I want to pay $11.49, and that means your order will just sit there until somebody who was willing to sell it accepted that price. Okay, I know that was kind of a lot, but that's what that is. but we're just going to do a market order so it gets fulfilled immediately, and it really doesn't matter anyway because there is no spread. The spread is the difference between the bid and the ask, so it's the same. Time in force, we can say day or market on close. So this is just saying how long do you want this whole order to be in effect. And when this market orders don't matter, it's going to go into effect immediately. So we could do day, which is right now, or market on close. So once it closes out, it'll buy it at whatever it closed out at. But I'm gonna just leave it at day. If we go to limit and we don't put in a price, we'll see it changes. So you have this day, then you have day plus extended hours, and then you have good till cancel, GTC, good till cancel. So that means it's going to just keep your order open until it's fulfilled every day during market hours. GTC plus extended means, hey, we're going to keep it open every day plus after hours. All right. So again, that was just a brief run through, but I feel like that was pretty straightforward. If not, just ask me some questions in the comments. So anyway, let's go ahead and review this order. All right, so it's gonna cost me $29.79. That's perfect. That's like right on the money. And okay, so we see the bid here changed a little bit, 11.45. So let's just place the order. I'm not tripping off a penny. All right, so we see it was filled at 11.45.99. All right, so now I own BlackRock. Let's go look at my other positions. So we can go ahead to planning and retirement and come over here and look at income estimator. And this is actually going to lead us to my next thing, which is why income is better than growth. So you can buy stocks with two different ways. So if you're watching this video, you've probably seen the GameStop thing and Tesla blowing up, and you've probably wanted to get in on that action, right? Okay, but what those people are doing are investing for growth, and you have to know what you're doing, all right? So you can't just be listening to Elon Musk. You're going to lose your money at some point doing that. Investing for growth is when you're focused on stocks that don't pay dividends, or they may pay dividends, but you're not even thinking about that. You just trying to double your money or triple your money. And again, that's good if you know what you're doing. But again, if you're new to this, you're better off hiring a professional to manage your money for you, or just simply taking the conservative route here and buying dividend stocks. Okay, they still appreciate in value. All right, and they can also still double and triple, but you're not even thinking about that. It's less stressful. You just put your money there and you don't think about it. Check it. You know, you're going to be buying this stuff maybe once a week or twice a month, you know, depending on how often you get paid. And when you go there, you can go look at, let's do that real quick. You can look at how much money you've earned. So if we go look at positions here, I'm going to open up a new tab. So we look at positions and I can look at my gain. So we could see, we can look at the stocks too. So I just bought this BlackRock. I also own Sunoco. Sunoco's the gas stations, right? So you may be seeing those, and that's a company you're familiar with. We see I'm down overall 1.56% with Sunoco, and I'm down $94. I don't really care though, because that doesn't change my quantity of stock. And when it comes to my ex-dividend date, I'm going to still get paid the same amount of money unless they change their dividends. As long as they don't change their dividends, I'm going to get the same amount of money. So I don't really care because I'm investing in these for income and not growth. So let's look at AT&T though. So AT&T, I'm up 0.95%, which is $50.94. Now, AT&T stock only costs $30. I could sell $30 worth of that stock and then buy one more share, which would give me extra income. So really what you want to do is kind of go back, and every time you log in, just kind of check and see what your gain is. Once it's up about 5% or over 5%, sell that extra 5% gain and buy more of the stock, because it'll give you more shares, which will increase your income. Hopefully that made sense. So you have AT&T, Sunoco, and down here VZ is Verizon. So these are companies that you're familiar with, and they pay pretty good. Not as good as all the other ones, but they pay pretty good. So let's go up here now to planning and retirement. We're going to go to income estimator. And I'm going to just click down here and I'm going to go look at my positions. So these are all my positions. Let me make this bigger. And we can look at, first of all, how frequently I'm going to get paid out dividends. So almost every month, except for March, October, and July, I'm going to get a dividend. And most of these are coming from BlackRock. They pay often. But the other ones only pay quarterly, but they pay out more. And you see right here, 4 positions. BlackRock pays out those days too. And here it's just 1. So BlackRock pays out these every quarter as well. If I have 5 positions, there are 5. I don't have 5 positions. Oh, that could be cash. Okay, because that's another thing. Keeping cash in my merit trade account, it depends on what you agree to when you sign up, also pays me out like a little small dividend for just keeping cash in the account as well. So I get paid out 5 in August, 5 in November, 4 in February, 4 in May, and then 1 all the other months. So we can see that I have total $19,025.72 invested, and my estimated annual income, again, future dividends can change if the companies decide they're going to lower or increase it. They could do either or. But right now, as things are just the way they are, I'll make $1,456 a year in passive income. And here's the cool thing about dividends is it's taxed differently than if I was getting passive income from like Amazon or Etsy or something like that, which I will make a video doing that as well, because I do have stores where I sell t-shirts and stuff, and it's completely automated, completely passive income, but I'll have to pay more in tax on those as I would when it comes to stocks. It's taxed completely different, and this is capped at 15%. So anyway, we look at my estimated average monthly income, and I make about $120 a month from dividends. All right, that's a bill, okay? And that's how you need to start looking at stuff. Do things to pay a bill. Even when it comes to my YouTube averages like $400 a month. You know, that pays almost all my bills, honestly. So that's how you want to look at things. You want to do stuff to generate passive income to pay your bills. And even in addition to paying your bills, you want to work on also reducing your expenses as well. And I'll make a video on how to do that. Quick example, my wife likes baths. And last month, she took a bath every day. And that water bill was like $160. And it's generally, and she stopped doing that after I told her that. And then this month, the water bill is $59. So, you know, again, this is like $100 difference. So we could just talk about different ways to reduce expenses in a future video. But that's it now for this video, how to invest your stimulus. I was kind of nervous making these financial videos. I don't know why. I've been wanting to do them for a long time. Hopefully it was clear. If it was anything that you guys were confused on, please ask questions in the comments. I mean, I make the best videos when I'm responding to questions. So do not hesitate to do that. There is no dumb question. And I hope to see you guys next video.